Russia has done two interesting things recently. Their central bank has said that they're going to add silver to their reserves for the first time, in addition to gold, platinum, and palladium. And the Russian government, back in late November, said that they were going to ban the export of waste and scrap precious metals. So they really, from December until the end of May this year, they want to keep their silver at home. I think they're starting to see it as a strategic and a critical metal, and they're playing their cards close to their chest, and they don't want to get caught off guard. So this is a chart that shows the price of silver adjusted for inflation. It peaked at adjusted $145. It gives you some potential for where silver might go eventually.
PeterKrauth, author of The Great Silver Bull, highlights Russia's strategic move to strengthen its silver reserves. The country's central bank has added silver alongside gold, platinum, and palladium, while a temporary ban on scrap and waste precious metal exports suggests an effort to retain domestic supply. China is following a similar path, with industry sources indicating significant Chinese purchases of silver in over-the-counter markets. Silver prices have responded to these global shifts, reaching a fresh 4-month high near $34.10 during European trading hours. The metal's strength is partly driven by a weakening U.S. dollar amid deepening uncertainty over the United States' economic outlook under President Donald Trump's leadership. Beyond monetary trends, silver's growing industrial demand is reshaping the market. Once making up 50% of silver usage, industrial demand has risen nearly 60% in just 5 years. This shift has sparked discussions about a potential silver market squeeze as supply struggles to keep up with accelerating consumption. The Silver Institute reports 4 consecutive years of supply deficits, with mining production failing to match demand growth. Notably, Bank of America Global Research projects a 120% silver deficit by 2030, reinforcing concerns about a widening supply gap. The rising demand is further amplified by technological advancements, particularly the rapid expansion of AI computing. The construction of new data centers and the supporting renewable energy infrastructure are increasing silver consumption, making technology a key driver of long-term demand. This structural shift increases the likelihood of continued supply constraints, further tightening the silver market. Krauth states that historically, the inflation-adjusted price of silver peaked at approximately $145, highlighting its potential for future appreciation. Given the rising demand, ongoing deficits, and increasing geopolitical factors, silver appears well-positioned for significant upward movement in the coming years. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Participants are taking delivery, so it's one thing for them to have a claim on the silver at the COMEX. They're more comfortable in having direct control over it. So we've seen a spike in deliveries from the COMEX of the physical. We've seen a similar bit of activity in Shanghai in terms of inventories. I think similar reaction there, risk of threats. The premiums in Shanghai, they've been higher, but they've actually just spiked. If you see on the very right, they've spiked again. They're paying almost 10% above New York prices. In India, it's a little bit different in terms of what's driving that, but they've turned to silver in a big way. I think they've found gold has become very expensive for them. I'm being told anecdotally that they're turning to, although they love gold, they're buying silver, and now they're buying gold-plated silver. So they're getting the gold look, but they're actually paying mostly for the silver. And so a lot of money they've started to develop their own silver ETFs. There's about $40 million a month since early 2022 that's flowing into silver ETFs in India. And in India, their premiums are being driven probably a little bit by different drivers, more so by the debasement of the rupee, but they're at 20% over New York prices for silver. And this is in the short-term contracts. Futures to spot spread popped in January. I think there was some news then about tariffs again on that day, and they jumped 50%. So it's a small premium, but it jumped by 50% in that same day. And if you look at the long-dated contracts, they're $5.50 over spot price. That's the highest we've ever seen. It's higher even than when silver was at $50. And again, that's the market signaling that they expect silver prices if you look farther out. One of my last charts, I thought this was kind of interesting. I went back and looked at what the Silver Institute said back in April of last year when they put out their silver survey for 2024, and then they ultimately revised it here in November. So what they said at the time was that the silver deficit, so that's essentially this number here, 182. Back in April, that was about 215 million ounces. So they revised that, saying that they thought that investment demand was actually going to be a little bit slower than expected. They revised that later in the year. But what's interesting is that if you include this number, which is silver flowing into silver ETFs, they actually revised that from 50 million to 100 million. So if you include flows into silver ETFs this year, their forecast, 282 million ounces. Look over here in 2020, 300 million ounces. We're almost at record deficits again if you include silver flowing into silver ETFs. So that shows you again the market is very tight, and we've started to see that happen right here in July of 2024. Silver flows into SLV, which is the world's largest silver ETF. We've seen silver start to flow back into that ETF in a big way. And one last sort of little tidbit in terms of how different players are starting to act on their silver. Russia has done two interesting things recently. Their central bank has said that they're going to add silver to their reserves for the first time, in addition to gold, platinum, and palladium. And the Russian government, back in late November, said that they were going to ban the export of waste and scrap precious metals. So they really, from December until the end of May this year, they want to keep their silver at home. I think they're starting to see it as a strategic and a critical metal, and they're playing their cards close to their chest, and they don't want to get caught off guard. So this is a chart that shows the price of silver adjusted for inflation. It peaked at adjusted $145. It gives you some potential for where silver might go eventually.
Solar energy is crucial in driving silver demand, with photovoltaic installations requiring approximately 80 to 100 grams of silver per panel. As the mining sector becomes increasingly central to the clean energy transition, renewable energy's reliance on silver continues to grow. These factors contribute to the likelihood of a prolonged silver market squeeze as supply struggles to keep up with rising demand. While silver's use in solar panels and electronics provides a strong foundation for long-term demand, broader macroeconomic trends influence short-term price movements. The ongoing electrification of transportation and the rapid expansion of 5G networks have further increased silver consumption in these sectors throughout 2025. PeterKrauth highlights that since 2010, analysts have consistently underestimated solar installations, with 5-year projections, on average, coming in at 3 times lower than actual figures. Given this pattern, solar energy remains silver's most significant industrial consumer, reinforcing its vital role in shaping the future demand landscape. As technological advancements and the clean energy transition accelerate, silver's strategic importance continues to grow, further tightening market conditions. Let's get back to the interview.
So, bottom line is, where's the opportunity? And if you look at the silver market, we know we have rising industrial demand. Industrial demand was about 50% just 5 years ago. Now it's moved up to 60% of the market of consumption of the supply. Investment demand, we know, ebbs and flows, but when it flows, it really comes back, roaring back, and that really is kind of the wild card that helps to cause these big run-ups and spikes in the silver price. But we also know that we have limited supply in the silver market, and that is likely to lead to more silver squeezes in the future. So you put that all together, and you have the ingredients for a strong silver bull market. On the fundamental side, we know that demand outstrips supply. These are numbers from the Silver Institute. Those 4 bars, downward bars, are the last 4 years of deficit. They expect that these deficits are going to continue for years going forward. They actually think that at some point in the next 5 years, we're going to reach a new record deficit in the silver market. We've seen that silver demand from solar has been growing. The big sort of huge growth years were 2021, 2022, 3, 4. It looks like it's slowing a little bit. I wouldn't necessarily argue with this because I do think the demand's going to continue to grow. I just think that it's not going to be at such an aggressive pace, but it's still going to grow, meaning more demand for silver coming from solar. I say that, but on the other hand, if you look at what's happened in terms of estimates by the analysts, if you go back to 2010, on average, the estimates looking 5 years out were underestimates for solar installations were underestimated by 3 times. So solar installations were 3 times higher on average what analysts expected going 5 years out. So that's why I think we've seen solar really become the single biggest industrial consumer of silver today. I think we're going to continue to see big deficits continue in the silver market. This is some research by Bank of America Global Research, and they looked out 10 years from 2020 and at all the base metals, and including platinum and silver in addition. And by far, silver was the metal that they forecast that would have the largest deficit. And so it's not that obvious because it's a pretty big scale, but that bar, that down bar on the very right, is actually 120%. So they figured that by 2030, the silver market would actually be in 120% deficit. So I don't know how that can actually be mathematically, but it certainly bodes well for higher silver. And very recently, there was some research that came out by TD, and they entitled this piece "Sleepwalking Towards a Silver Squeeze." And really, the gist of it is what they're saying is that the premiums on the exchange to get physical right now versus the futures price are abnormally high, and that this implies that the market participants are looking to take delivery immediately of their silver of physical metal versus having to hold the futures contracts. And this is being driven by the threat of tariffs in large part by Trump. So this morning was his inauguration. There was again some talk of tariffs. I've heard that he's sort of dialed that down a little bit, but that certainly is not resolved. And I'm sure he'll be willing to pull that out anytime it's in his favor. So to kind of sum that argument up, really what they're saying at TD is that metal is flowing from London to the U.S. on Trump tariff fears, and just 30% of London silver is really available for delivery. So these are getting really tight in terms of markets.
Supply constraints are becoming increasingly evident as industrial demand for silver accelerates, particularly in solar energy and advanced technology sectors. Silver plays a crucial role in the clean energy transition and data infrastructure expansion, so its market fundamentals continue to tighten. Historical trends suggest that analysts have repeatedly underestimated the scale of silver's industrial usage, raising the possibility of even more significant shortages in the years ahead. As nations secure their silver reserves and supply deficits persist, the metal's long-term outlook appears increasingly bullish. Will silver's expanding industrial applications drive prices higher, or will economic uncertainty create unexpected hurdles for the market? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.